Hey everyone, welcome back to another episode of the 6-5 podcast. It's Friday. It's time. We are doing Earnings Palooza 2.0. It's the duo of 2.0 of Earnings Paloozas. Week 2, at home, living my best life. And Patrick Moorhead, based on that underbed lighting behind you, makes me think you're in a hotel room somewhere working harder than I am.
Yeah, you can probably tell like JW Marriott, right? That's what's going on. But Dan, I'm losing my voice a little bit here, so I'll be slugging some water and coffee. But no, this is week 9 on the road, coming to an end. And I'm thinking like, I'm running from third base into home, sliding head first. The question is, am I going to hit that home base or am I going to come up short? Because I don't know if you've looked outside, but apparently we're going to get some nasty weather in Austin. So I'm hoping that I can get out of Orlando here.
Yeah, I
Although
got some bad news for you. You're going to spend the weekend there, and we're going to have our weekend meeting over video. But that's okay because you and Orlando have something in common, you Mickey Mousers. But in all serious, it'll be good to have you back. I actually have to go back on the road next week after only a brief trip this week out to the coast. But I did have 1 week in there. I think the week after the Grand Prix that I actually didn't travel, although somehow I ended up working more than when I do. So there's no break, there's no relaxation, there's no down in this economy, or if it is down, all it means is make less, work more, be happy. They call it the law of diminishing returns,
there
Pat.
we
You know
go.
what? I don't subscribe to that. I subscribe to kicking ass, taking names, and trying to get explicit markers on all of our podcasts. So Pat, let's do the disclaimer. So, if this is the first time watching the 6-5 podcast, it's 6 topics for more than 5 minutes each. It was supposed to be 5, but we're very excitable. Um, just as a quick disclaimer, this show is for information and entertainment purposes only. And while we will be talking about the earnings of publicly traded companies and other things about these companies, please do not take anything we say as investment advice. As Pat likes to say, do the opposite. But that's kind of advice, so don't do that either. Just don't take any advice from what we say. All right, Pat. So we got a busy show today. Like I said, it was Earnings Palooza week 2. We're going to be talking AMD, Lattice Semiconductor, Qualcomm, Luminar, Skyworks, and Lenovo. A lot of chips this week. A lot of chips. And some infrastructure. And you and I have had an opportunity to have some conversations with a lot of the top executives at these companies. So we're going to play CEO Whisperer this week, and we're going to give our best advice as to what has happened to some of these companies. But Pat, I don't know. We've got stuff to do. You're probably at an event. I've got a lot of napping to do the rest of the day. So let's go ahead and get started. AMD, what's going on?
Yeah, so AMD's Q3, no surprises versus the restatement, but obviously the restatement was a surprise, which is directly attributed to the cruddy PC market. But due to AMD's diversified portfolio with newly acquired Xilinx hitting embedded markets and AMD blowing and going in the data center market, they cranked out a measly 29% increase in revenue, all the way to 5.6 billion. And it's amazing, Daniel. I remember when I was at AMD wondering if we would ever be a $10 billion a year company. And here they're cranking out big numbers like this. Gross margin was definitely lower, again, based on the PC inventory rebalancing and the decrease in demand. And it's funny, during times like this, people put the exclamation point on cash. They cranked out $1 billion in operating cash, or 965 million. And it's things that, you can tell what time we're in when people start talking about cash. And you understand that because, AMD might be taking, a few write downs, but, cash is cash, right? Funny money versus real money. So some of the big pluses, I talked a little bit about, data center and Epic, right? Just completely blowing and going. Record revenue, 10th straight quarter, up 44%. 70 new instances just this quarter. They doubled revenue for Epic. They're shipping their next generation product, which is called Genoa. It's interesting. They talked about it, but they're announcing it next week. And they did really well in Xilinx FPGAs and Pensando DPUs. It's kind of the negatives, though. Enterprise down, data center GPU down. I know it's a tough year-on-year compare because of that Frontier supercomputer, but still, client down 40%. PC market sucks. PC demand, PC OEM industry. They lost $516 million in that division, which is pretty fugly. So, hey, PC gaming is down, but that's okay. AMD is in the Xbox and the Sony, and therefore revenue is actually up in that. Discrete GPUs were down. You and I missed it yesterday, but AMD had its announcement for its RDNA 3 graphics cards. So I'm probably going to go back and check this out. And let me finalize talking about their embedded results, which is really Xilinx, record aerospace, record defense, record automotive. And it's a combination of classic FPGAs. And Daniel, this class of products that's called an adaptive SoC. Essentially, it's an SoC with an FPGA on it. And you're finding these in just a ton in automotive. And really no negatives. And, I'll end by saying, what a great affirmation that in times of trouble in the PC market, that, these longer lasting, smoother business, not necessarily a rocket ship, it mutes the cycles, which I think AMD has always been, that's always been a risk, or I would say at least for the last 25 years. So all in all, no strategy change. I continue, I'm expecting that AMD could come and have 30% of the x86 market in servers by the end of this year. So good job to AMD.
What number was that? Say that again.
I think that they could have 30% market share in x86 data center by the end of this year.
That's absolutely staggering. It's huge. You gave a lot of good cover there. You did hit it right. And you and I did talk about AMD when they put out their earnings warning. And so this is kind of a double click here at this point, because like you said, there wasn't much of a surprise. But here was the one surprise, was probably the contrasting viewpoints about the data center server market that you got from Intel versus what AMD showed, which is to your point of how this potential 30% market share is being arrived at. It comes down to there is still more demand. And you can kind of look out, if you zoom out a little bit at cloud, it sort of tells a little bit of a story about data center. And you're seeing kind of a slowing demand at AWS and Microsoft, but not slowing by exponential amounts. It's not going from we're growing 40 to we're losing 40. It's going from, Azure growing 40 to 35. Well, it seems like with AMD that they're continuing to take share, that they're executing very well in that particular business line. They're winning more SKUs with the right relationships across the OEM portfolio. They're winning with cloud partners. And effectively, this has gotten them into a position where the really bad temporary results that we're going to see for PCs can be somewhat managed by stronger performance in other areas. The Xilinx business showed some strength here. Obviously, that huge year-over-year growth was an accretive number that they were able to then add in on a year-over-year basis, but there was no misleading there about what was happening. Overall, we've got this. Oh, Pat, good news. The chip shortage is over. We do not have a shortage of chips anymore for PCs or GPUs or.
I don't know, man. There's a lot of analog stuff I'm sure can get screwed up, that goes into cars, but we'll see.
I just mean like the gaming chips, the phone chips, all the stuff that, that over ordering has you're seeing it in the macro data now. You're seeing it in inventory data now. You're going to hear about it when we talk about Qualcomm.
Yeah.
If you need a chip, if you need a device, we've turned a corner there. So and that's why these PC numbers are so bad though right now, is because everybody took huge inventories from the likes of AMD and Intel. They stockpiled up the inventory. A lot of it came in one big glut. Numbers went crazy on inventory. Now they're not ordering. They're temporarily not going to need to order until they burn off this inventory. So that's kind of what happened. But overall, Pat, I'd say it was a pretty good result from AMD. I mean, like I said, with the exception that PCs are going to stink for a while. It just is what it is. Let's go to Lattice. Let's talk about Lattice. First of all, I had the chance to, go see Jim Anderson and Sam this week. And so I tweeted something along the lines that said, just because you had great earnings doesn't mean you have to be so humble. But they are really some of the salt of the earth, just best people. And I guess, when you're only, doing a few bill, or, you're in the billions, not in the hundreds of billions, maybe you stay humble till you get there. But I also just say they do great earnings slides. I really do appreciate that about companies that put together very consolidated and valuable slides. We'll share the link in my Lattice piece, but let's just talk about the highlights, Pat.
Oh, hey, Daniel, though, hey, Dan, what makes a good slide deck for earnings? Just for our listeners.
Oh, well, I mean, first and foremost, I think it's call outs on the most important data points and comparative data in terms of making it very clear. So like on the left side of their slide, the three things that people care about, they have what's called their highlights: revenue, margin, EPS. They have those data very clear, and then a very clear indicator of how it compared on a year-over-year basis. It sounds crazy, but I can't tell you how many times I'm reading these reports, and it's like, you got to it's like brain damage to find this stuff. It's easy. The other thing I really like that they do is they break out their different segments, and then they have a couple of very clear highlights. So if you had to, it's the Cliff Notes, right? If this is all you looked at, you could get a really good assessment of what is going on in the business. Revenue growth, margin growth, EPS growth, huge numbers, 31% year on revenue, 69% margin. They expanded their margin by almost 600 bips, almost 6% margin expansion, which is just absolutely terrific. The street has to love it. Now, funny is they got a great gain afterwards and then gave all the gains back because this market sucks. But in the long run, you got to look at the company, and the company's expanding and its earnings per share up 71% on a year-on-year basis. And Pat, here's what I really love about Lattice and why I called them out in my Market Watch piece this week. 6% of their business is exposed to consumer. That's it, just 6. So they've done they're kind of got that Marvell-esque story going on where they've done an incredibly good job of finding value in the data center, in the IoT segment, in automotive, and this has led to strong growth. Their industrial automotive growth at 45%, sequential 15%, their comms and computing at 26%. And of course, their consumer did fall 13%, but it was such a small part of their business that it really didn't have much impact on the company. And Pat, I'll just, try to leave a little oxygen in the room. We're going to be out at their event in December talking about their next product line launch, but they're still really just getting ramped from their last product line launch. So this is early days when you're at the size that they're at, okay? And like I said, they're tracing more towards $1 billion in revenue. A bad economy doesn't break you. In fact, the companies that perform well and gain market share and execute. And it seems that in this area, this low to mid market of FPGAs, Lattice is the game right now. And they're doing an incredibly good job. It's hard to not give them credit. So kudos to Jim and Assam and the team.
Wow. I'm fighting for air here. No, what I'd like to do is talk a little bit about their different segments. And like you do math and have an Excel spreadsheet. So when something is 50% of the mix and it grew 45%, you're going to have a good quarter. And that's exactly what the company did in industrial and automotive. And a lot of ADAS and dashboard, which is really cool. And this is an area where I don't think we have caught up in chips in automotive. And also on the call, Jim had talked about automation and robotics. So four big areas inside of that: industrial and automotive. And it's also funny that, hey, if you've never been in the PC market, or if you're expanding your presence in the PC market, you can still drive growth in that market. And comms and computing, the company did just that. They had new PC designs where, for instance, in this new Lenovo notebook I have, there's an FPGA that essentially intelligently knows to tell me when somebody's looking over my shoulder. Okay. And they work with, they bought a company called Mirametrix. And that's really just the start. Also, they're part of the 5G build out on the edge. And who doesn't love that? Their content doubled from 4G to 5G, which is a good thing. And finally, data center servers, more servers, where essentially they're a security chip that's the first boot that enables the highest level of security. And yep, consumer, 6% of the mix, down 13%. So what? Market sucks. Let's move on. So, Dan, I am super excited to go out there for this Avant launch. And you're right, it's just the beginning. Avant doubles their SAM, right? Their addressable market. And they get right into the territory of Intel FPGAs and AMD FPGAs. And both of those companies are really looking at FPGA capabilities at the highest power SoCs. That is not what Avant is doing. Okay. Now, you might say you could have a super high performance SoC and you have more power for the CPU because Avant is lower power. But anyways, you get the point. But tune in to the 6.5 at the Avant launch event coming up. It's on Monday, December 5th. The videos might be out on that day. They might be a day after, but tune in to our tweets. Did I just do a promotion here?
Yeah, but that's pretty common for you.
Ouch, ouch, ouch.
Oh, buddy. All right. So let's move on to a big one for this week. You and I both had the chance to speak with Cristiano Amon on earnings day, CEO of Qualcomm. I think we had somewhat similar views, but you get to go first. So let's see what you got.
No, I appreciate that. So, backdrop is smartphones are down. Shocking. The good news is that Qualcomm has diversified its portfolio with IoT, automotive, and RF. Even with the smartphone market being in the tank, their revenue is up 22%. Earnings were up 26%. EPS was up 23%. A very clean flow down in profits. Biggest thing for me was it kind of got lost, like how the stock could be down yesterday. And I know the whole market was down, but it was kind of ridiculous. But they essentially announced that their percentage of getting the modems for Apple and a little bit of analog in there went from 20% to 100%. So I'm not an equities analyst, but sometimes I try to play one on TV. But when you update your spreadsheet on Qualcomm and that number goes up by 80% to the world's second largest smartphone maker, the largest premium smartphone maker, wouldn't the price go up? I don't know. I'm just a neophyte here. So again, those were the pluses I saw. Some of the negative, mobile demand and OEM and ODM inventory bleed. Sound familiar, Daniel, when we talk about AMD and Intel's client business? So I was super impressed with the explanation on demand and inventory, and no crazy strategy changes, and they're sticking to their guns. It just makes sense. So I thought they had a great quarter.
Yeah, you hit on a lot of important things. We had to, like I said, not only do we talk to Cristiano, I did a 6.5 you had to split because you were, I think, in the air or on stage, but I got to talk to Akash, the CFO, as well, and got to kind of do the run through it. Pat, look, record year, record revenue, record EPS. The guide is what kills everyone right now. Nobody cares what you did. Everyone cares what you're going to do. And I guess if there's a truth that the market's forward looking, then that's why that they were being penalized for that. But gosh, if you look at the execution across the year, what did Cristiano Amon come out saying he wanted to do? He wanted to diversify the business. So whilst QCT, which is really the chip making part of the business, was growing that handset business, it was also creating multiple billion-dollar businesses that nobody really has in their spreadsheets, at least historically, if not. The RFFE business, which we'll talk about more when we talk about Skyworks, that kind of leveled off a little bit. But I mean, you got to remember what it got to. I mean, it was nearly $1.25 billion run rate. I mean, great business, and also an incredibly difficult business, and that's why that they've been so successful in it. The IoT business, about $7 billion business for the company now.
Yeah.
And by the way, diversification into industrial applications. So it takes some of the weight from the consumer and the handset off the company's ability to perform long-term, more B2B. They've got an ACPC business that's obviously causing some indigestion for some people out there. The ARM lawsuit rings a bell in my mind. And, Pat, by the way, I just want to put this out there since we haven't really talked about that too much here on the show. I still think that this might have Apple fingerprints on it, the whole deal. There's a little bit of, I just kind of trying to figure out why ARM would want to go after what could be a great revenue driver if Nuvia is successful. It would be a lot of licenses, a lot of utilization. I just don't know. It's just something that's on my mind. Where's the pressure really coming from there? But the PC business has done pretty well to this point, and they haven't even really shown their best hand yet. We know with Nuvia, when they get that product into market, they're going to try to redefine the PC category. So that's a big opportunity there. The automotive business, they grew their pipeline by an NVIDIA pipeline in 2 months, literally. And this is, by the way, an $11 billion NVIDIA pipeline is impressive. So let's not make it sound like that's not good, to $30 billion. So the earnings were good, but the outlook is more encouraging than what's being led on to. All the negativity is the fact that these chip makers have to come out and say right now that this over inventory indexing that took place over the last few quarters due to the supply chain shortage is finally coming home to roost. NVIDIA went through it, AMD went through it, Intel went through it, now Qualcomm's going through it. But overall, Pat, they're thinking a quarter or two, and then they're going to turn the corner. And by the way, Metaverse, full tilt with Meta. Now that company may be a mess right now, but they are going to be one of the first to build any scale in the Metaverse, and Qualcomm got that business. And then, one of my calls, Pat, is the premium tier is going to be super successful.
Yeah.
Samsung is all in on Qualcomm. Samsung is the premium tier equal in devices. So lots of good things happening over at Qualcomm. There was some, they did guide the wrong way. I mean, you can't call it anything but that. And that's what the street got upset about. But I think it's a reset. I think their expectation is now to put the foot back on the gas. So
yeah, hey Dan, did I tell you that Qualcomm is having a tech summit in 2 weeks, and the 6.5 is going to be there on the road?
Can we do a promo, please? I got to pull up my notes for the next topic anyway. So
No, I'm super excited about that. Hey, what's your take? I was going to bring this up in Skyworks, but I want to bring this up now with you. Qualcomm announced that they were going to integrate RF into the other BUs, so we will not see a distinct RF number. They said they might bring it out time and again, every once in a while. My guess would be for investor days. But is this a sign of decline or slowing down, or is this more simplicity? Because when you think about it, RF goes across everything, right? I mean, it's handsets, it's IoT devices hanging on the edge, it's in PCs. What's your take on that, Daniel?
Yeah, I think there's a couple of things going on. I think that their desire to be able to show discrete new business entries and then show success tends to have a period of time in which it's meaningful, and then a period of time when you hit maturity. And I think the way they're kind of looking at it is the RF and the 5G and the front end and the handsets and the devices really is all an integrated thing. And so at some point, I think we've hit the maturity end of growth, perhaps, for this in this cycle. What's that?
I said interesting.
That's I'm not 100% sure, but what I'm saying is you saw this quarter, they've been doing this growth across segments thing, and 50% on handsets and 40% on automotive and 40% on IoT and then 4% on RF. If they don't believe that number maybe is gonna, if it's hit that, because remember, Pat, it was like 100% for a long, it was like 100 and then like 50 and like, I don't know if they're kind of saying, let's just kind of wrap it into the broader handset QCT number. And of course, it's not just handset though, because it goes across automotive and other parts, but maybe they focus on the 3 bigger growth areas and don't have that smaller number showing up every quarter. Plus, I don't think most people understand what RF front end is. So, when you talk about adjacencies, you talk about handsets, people get it. You talk about automotive, people get it. You talk about IoT, and you're like, and they got this great mobile RFFE business, and people are like, what the is more mobile RFFE? So that might be it. They've got some great IP there. It's growing because that capability is what's helping IoT, automotive, and handsets.
Yeah, they did one final victory lap and a middle finger to Qorvo and Skyworks, basically saying we're number 1 in handset RF. See you later. It's like let's move on here.
Well, it's 4.3 billion in revenue, but like you said, it does really attach across the portfolio. So. We're both just speculating as to what it might be, but I don't think breaking out something if it's not showing that kind of growth, especially because it isn't that like maybe in the next year when Nuvia chips start to hit, will they start breaking out PC?
Yeah.
You know what I mean?
Yeah,
so you can start to see
that IoT category is pretty wide definition of IoT.
Well, for sure. But that's sort of a market trend, right? It's like cloud.
Yeah.
What is cloud, Pat?
Yeah.
Like every company's definition of cloud is different. It's economics and architecture. So, all right, let's jump in. You want to talk Luminar? Is Luminar next?
Yeah. Let's talk Luminar.
So, this one, is a company you and I both really like. Very interested in the company. It's early days, so let's be very clear. The revenue guide for all of next year is $40 to $45 million. This is not a company that's doing massive revenue. This is a company that's all about building a technology moat and winning design relationships with key companies. And this quarter, the company showed good growth in revenue, beat by a significant number over expectation. By the way, this is a company that is doing 45 million revenue guides and is buying its own stock back. So it clearly sees that it has a long-term opportunity. The company's sitting on a good amount of cash, so it's able to operate, with the long-term in mind. It's still burning cash, and that's probably what most people are concerned about. Is we're in an economy right now where nobody likes a company that burns cash. You can look at, by the way, one of my favorite companies that's getting absolutely railroaded today, DraftKings. Grew 130% revenue, but guided a bigger loss next year, and it is getting freaking slaughtered today. Because right now nobody cares about growth if it doesn't come with profits. So you got to have both. That's going to be the longer ramp. But for companies that have enough cash to operate, know what they're building, and know that they're differentiated, they're not. I'm not selling one share. I'm not selling one share. Keep going, keep growing. Big thing for this quarter, Pat. With Luminar was they got that production unit with SAIC, the rising auto unit is shipping in China. And so what we're starting to see is Luminar's technology, the technology that uses multi-sensing for these vehicles and has what we can say from our experience and our training, a better safety profile and more sophistication than single sensing like our friend Elon is doing. He's not really our friend. I'd like him to be his friend. I think he's really cool. If he wants to come on the show, I'd love to have him. But and I think the multi-sensing is differentiated. Getting the cost to scale is going to be important. But getting these out in the market, getting Mercedes, Polestar, Volvo, SAIC, big wins for the company. Getting production units, big win. Winning in one of the world's largest EV and smart car markets, China, was a big win. So it was a good quarter overall for Austin and the gang over at Luminar.
Yeah, talk about a good earnings deck. I mean, they just crank it out, and Like you said, and this is true in so Luminar not only does the assembly of the LiDAR system, but it also does all the semiconductors inside of it. And whether it's manufacturing the devices or, excuse me, or doing assembly, scale absolutely matters. And they just started production now. So, my expectation when SAIC, which by the way, China's largest automaker, that gets out. Polestar comes out with Polestar 3, and Volvo brings out the EX90, I think on, like 5 days next week. I mean, those those numbers just have to go in the stratosphere. And one of the things, there's 4 or 5 people that are in this market right now, and I really think one of the biggest thing that sets Luminar apart is they're actually shipping. A lot of people have roadmaps, and a lot of people are sampling devices, sampling full assemblies, but they're so far out. So we're going to see, I think, not just the perceptual lead, but the financial lead make some of its biggest moves out there. So again, I'm super interested in what the future holds with them. I'm hearing we might have a trip down to visit their headquarters in Orlando, and it's going to be awesome. I like going through factory tours. I like going through headquarters of startups. Super fun, and I'm just waiting for Austin to maybe send me a test car to review. You think that's going to happen?
I would hate to break it to you, but don't come to my house and look at my driveway.
Okay. Yeah. No room. I get it. Once NVIDIA sent me an Audi A8 L that had their silicon in the dashboard. It was so amazing. I thought they were kidding. Michael Lim's like, "Hey, you wanna do a review?" I'm like, "On what?" "An Audi A8." I said, "Well, are you gonna send me one?" He said, "Yes." So good car.
Yeah, well, we'll have to see how that goes. But hey, we're here. He knows where to find us.
Yep.
So let's see about that. So all right, so let's talk more RF. Let's talk more RF, Pat. Let's talk
We're going to talk analog, baby. We're going to talk about Skyworks
talk
and
about making stuff work.
exactly. So, Skyworks doesn't do as much marketing and promotion as a lot of these other chip makers. So, I thought it'd be helpful for our listeners just to get a little bit of a background. So first of all, it's all about analog. Okay, analog RF and also power. And if you know anything about analog, I'm not talking to you, I'm talking to the audience, you know that it's black magic, basically. Okay. There are less people who get RF and power analog devices than there are people who do graphics. And graphics is a black magic as well. 11,000 employees, 17 countries. They have their own manufacturing plants, Daniel, which people just completely gloss over. And in times of need, they had the silicon. In times of bust, they're able to shift things around. And when you have your own manufacturing, there are tricks you can play with flow that truly allow you to differentiate yourself. So, and by the way, if you look at the content in like a Samsung mid-range phone, their content is actually going up between 4G and 5G. And if you look at a teardown, Daniel, they're sitting right next to Qualcomm. And I'd argue in some of these phones, Skyworks has more RF content in the smartphones than Qualcomm does. So Qualcomm gets the message out more, but we can't forget that there's somebody else in this hunt. So how do they do, Pat? Like, let's get to the earnings. Talking to myself, that's scary. Record revenue. How about that? There are other companies that didn't have record revenue in RF, and great earnings, diluted EPS of almost $2. So actually $3 on a non-GAAP basis, and it was very clear and very simple what it took them to get there. So first of all, they managed China really well in comparison to their competitors. They bled inventory down. They did the double take when they saw orders that were gigantic in China. And at least for the mid-range in China, that market is way down. And in fact, even premium market is down. So wait a second. Why did Qualcomm do so well in premium? Well, they took out people like MediaTek who were in there. So it was a compete on the digital side as opposed to the analog side that we're talking about. So great performance, diversifying. Almost half of their revenue, around 40%, is outside of smartphones. So I would say that they're almost fully diversified. But anyways, I'll kick it over to you, buddy.
Well, Pat, you hit it on the head. I mean, look, Qualcomm's doing really well. We've reiterated that and continue to, but so is Skyworks here. I mean, their numbers are good. You know, looking through the report, I don't track them quite as closely as you do, but they've got key partnerships, making major launches, partnerships with companies like Amazon, companies like Vodafone. You know, they're doing stuff with some of those flagship units from companies like Google and Samsung. So they're in the game.
Yeah.
And they're in those right markets. And if you kind of look at the result, by the way, the stock is screaming today. So people are very happy with the result from this quarter. You know, you look at, they're in the right markets. Where are they getting? They're hitting mobile, they're hitting IoT, they're hitting automotive, they're hitting data center, they're hitting infrastructure. Yeah. So they're playing across the right spaces. They're impacting and you know, dealing with a tough, complex technology that people need and need at scale. So we've done a lot of victory laps for Qualcomm and their success in mobile RFFE, but Skyworks has a comprehensive RF offering and they're winning it in a lot of different markets, and that's driving good results for the company. So while I think they'll struggle to win the top of the market, I think Qualcomm will continue to make their hay in that space, basically because of everything else Qualcomm does in that space. You can't deny that this company is doing a good job in playing in the right spaces and building the right ecosystem, Pat. So, you know, I don't have as much content on this one, but let's just say my overall impressions from reading through the numbers and the results is that they're heading in the right direction. It's also, it's also an indicator that 5G has a lot of growth to go. And despite the fact that, you know, many people are kind of saying the consumer market, device market is going to get smashed, people are going to want to upgrade to 5G devices. And that's not just phones, that's 5G everything that's going to enable greater connectivity. So decent, solid from Skyworks, Pat.
Good stuff, man.
All right. Yeah, so I'm, I think we're on to 6 now, right?
We are. Let's hit Lenovo.
So I am pulling up my notes because, you know, you got to do this. So we got to, by the way, you and I got to spend some time with YY. And YY, the chairman and CEO, that's his nickname. That's how he is addressed. And he came to the Grand Prix, Pat, and we hung out and we heard from him, and he was very optimistic and very positive, and for largely good reasons. Now, over the last several quarters, Lenovo has been outperforming the industry, and this company sort of focuses on. It's sort of broken its business into 3 big focus areas. You got the devices, the IDG business, you got the SSG, and you got the, is it DCG? ISG, Infrastructure Solution Group. Yeah, sorry about that. There's so many acronyms out there, and this company is one that loves their acronym. What happened though, Pat? So overall revenue down just a little bit, but margin up and profit up. So on a year-over-year basis, given the fact that this company, and they showed a slide, 62.6% of its revenue mix is PCs, and yet only a 4% decline in revenue. Well, how did they fix that? How did they do that? Well, they diversified their business, and they've diversified very well into areas that are not being hit as hard by the market. So you want to look at where things have gone well. Services, 26% growth. You and I talked to Ken Wong, who leads that business late last night. And that was a great opportunity to kind of hear what they're doing there. And then ISG, which is led by our friend Kirk Skaugen. Kirk saw a 33%. So they're making huge growth on a year-over-year basis into those particular business units. And what they were essentially able to do was offset the softness that took place in the PC market. The company is doing the things right to gain profitability. And of course, they're focusing on what they kind of call this one Lenovo program. Now, question I'm asking and I'm waiting for a response on is, I want to understand with Lenovo's incredible strength in PC, that's 63% of this multi-billion-dollar business, how much they're able to lean on that to keep growing that non-PC business. They've been able to diversify to that close to 60-40 mix. But if they're going to be successful over this sort of 1 to 2 year, what I think is going to be gully in the space for PCs, they're going to have to see that ISG number and that services number continue to grow. So you've got the device as a service thing. That's a big part of the services, but that's going to have to scale into a lot more enterprise services. And then, of course, the ISG business company got some really important approvals to do more business with the federal government here. That was a big thing for Lenovo. And of course, they've had a big diverse SKU win across the portfolio. And we've done a couple of their server announcements here on the show. So, you see that the company believes that ISG is a huge moat for it. They're seeing the server market growth. They're seeing the edge growth. I mean, they're quoting out some numbers, Pat. They see by 2025, the server opportunity is going to be $134 billion. And by the way, best growth, I'm just kind of looking at their last 5 quarters, this quarter. So on the ISG business. So I'm really liking the fact that the company's put its head down, it's diversified the business, and it's coming into what everybody's looking at as kind of a tough period for the OEM on strength. The number to watch going forward is going to be Dell to see, because that is the most sort of comparable in terms of portfolio, and see how Lenovo did and how did Dell do in this particular quarter. Because like I said, Lenovo was really able to prop itself up well, seeing record revenue in areas like storage and edge, and offset a lot of the weaker softness in the PC space. So, Pat, I feel like we're cheerleading. I'm not meaning to cheerlead. I'm just being candid. It was a really good performance.
Listen, there's cheerleading, which is saying stuff that you don't actually understand, in my opinion. And then there's admiration. And there were a lot of things strategically that Lenovo did that if I were a betting man, I would have said, I don't think this is going to work, right? So first of all, Lenovo used to be just a PC play. A good one, don't get me wrong, and they absolutely kicked butt with the ThinkPad brand in particular. But then they went and they bought Motorola's handset business from Google, and then they bought IBM's server business, x86 server business from them. And those businesses were absolutely tanking after they bought them. And profitability was like super elusive. And what Lenovo did is they brought in some really strong management to figure out both of these businesses. And heck, the Motorola brand is number 3 in the United States, and it's profitable. And if I look at their roadmap, I got a sneak peek last week with their IDG senior management. The roadmap looks freaking hot. So super excited with that. And then when you look at the company brought in Kirk Skaugen to run ISG, I think he was the second guy who came in there, took many years to turn that boat around. And here we are, record revenue, record operating profit, record revenue in not just in one segment like CSP, but in enterprise and SMB. CSP grew 48%, Daniel. Seems kind of close to the amount of growth that we're seeing in the top CSPs, plus gaining share from some of these ODM only folks. It's the first company that I've heard from that actually outgrew the market, and they did in enterprise and SMB by 5 points. Okay, then you might say, oh, it's got to be all the Asia out of China. Okay, record revenue out of the Americas, EMEA, and Asia Pacific. So, okay, that takes that off there. Oh, it must be just servers. No. Record storage, edge AI servers, and storage. And servers outperformed their forecast by between 20 and 100%. Oh, and by the way, in the quarter, they brought out over 50 new products. So do I sound like I'm cheerleading? I don't know. Maybe, but they're kicking butt in places that other people aren't. They're taking share and they're growing profitability. So yes, I think that's cool. And hey, let's just have even more risk. Let's create a services division inside of a company that isn't known for services. And then let's talk about them first on our earnings call, first in our product presentations, and like you said, doing really well. The one thing I want to zoom in on, which made really stood out to me, is I get a lot of the arguments in the market that says, "Hey, Lenovo's doing a bunch of break fix of the hardware that they're bringing up." Boom, managed services and project solution services are 52% of revenue mix, and that says to me that 48% is break fix. Not that break fix is bad, but it's very highly margin. But it's not as sexy and it's not as scalable as their managed services and project and solution services that they do. And oh, by the way, TrueScale, they have 8 case studies out on the website. I wouldn't say dogging them, but like, okay, as a service, let's see the proof. And they're starting to build that marketing capability behind it. That's it. That's all I got, buddy.
You done?
I'm done. Let me take a breath.
If you're done, that means that we're done, right? Does that mean that we're done? If you're done, that means that we're done.
Maybe.
That means we're done. Well, listen, great episode. Another big week of earnings. We're going to have some backlog here because we've got some things that happened that were not earnings related, but we figured we just had to hammer through it. I think this is the last week of it being crazy, and we'll come back. We'll talk about the Honeywell event. We'll talk about the Cisco event. We've got several other breaking stories that have taken place and more related to tech, new products, new offerings, new services. We're going to come back to that. We're going to get back to that in the next week. But we know you love when we talk earnings because it's the ground truth of these businesses, and we dig that conversation. If you haven't hit that subscribe button yet, what are you waiting for? Hit it right now. Follow at Patrick Moorhead on the Twitters. I'm not sure if I'm going to pay the $8, so I may no longer be verified on Twitter. But I was verified early, and that was kind of a badge of honor for me. I don't know if I need to be verified anymore. I can become, I can become one of those people that just trolls on Twitter. Then I become anonymous.
Yeah.
What did the guys on the All In call them? They had a funny name for those people. But anyways, I can't remember.
Brigadoons.
Brigadoons. I'm going to become part of the Brigadoons. That's my goal. I'm going to Brigadoon you, Pat. But in all seriousness, we love our community. Follow the 6-5. Join us on LinkedIn. Follow us in the community. We have lots of interviews, conversations, events, and of course, this show every week. Favorite thing to do, start to finish. But for this week, for this show, it's time to say goodbye now. We'll see you all later.
Bye-bye.